What's going on, guys? So this morning I want to show you guys a trade that I made here on GameStop today. Even though I was right, I ended up being wrong. I'm showing you guys this loser today on GameStop and how I had the plan. I had it all laid out, everything in front of me. I was ready to make money, baby, but I ended up just not being able to execute the trade exactly perfectly. You know, you're never going to be able to do it perfect, but today I just wasn't able to manage my risk and manage the overall size and stuff like that in this trade. So I'm going to talk about it, kind of what went down and all that fun stuff here in this video. So make sure you guys stay tuned. Well, what's going on, guys? So today I want to kind of do a little recap here on GameStop. So this morning I posted on StockTwits talking about how I thought that GameStop would have a spike here at open, and then we would probably start to fade lower after that. And you can see right here, this was this morning at 9:22. A lot of people always say I don't have a plan, that I just go and just trade all willy-nilly and just do crazy stuff. I don't actually have any kind of focus, but was watching GameStop this morning for a pop to short into a fade below $5. Now, I want to talk about basically everything I did wrong on this trade. Obviously, in hindsight, it's easy to sit here and talk about what I did wrong, but I think there's some good lessons to be learned here, and we'll talk about lessons in this video. So let's talk about it. This morning was a little bit too early to short. I was small size, only 500 shares there, so it wasn't terrible. But what I should have been focused more on was, okay, we pushed above the VWAP, above the EMA with quite some conviction there at open, and we got up over to 570. This was a pretty good fill there, and overall was kind of just adding small size, with kind of my stop there at the 570, 580 area. And you can see kind of why I was doing what I was doing. This thing got crushed after hours yesterday with the news. An ER came out, bad news for the company, going from 670 down there to $5, and then kind of just bouncing back there from the $5 area. So I was personally, I had a lot of conviction. I guess I had a lot of conviction. I believed that this stock was going to kind of fade after the pop there at open. The stock is doing basically exactly what we thought it would do, but we ended up getting out. Just that really came down to overall execution. You know, my overall trade sizing and stuff like that. Really. You know, in hindsight now, it's the question of, you know, what could I have done differently? Was my biggest issue just because I covered up there the 580 area? Was that the problem, that I covered, you know, at my original kind of stop area? But I think, you know, now looking at this, I really should have been had a little bit more wiggle room here. So that would have also had to do with my overall sizing as well, and also kind of my you know, where I was sizing at. So this is a prime example of even when you're right, you're wrong. I think that's a good way to put this. Even I believed, you know, I had the conviction. I thought I had the game plan. You know, I thought that GameStop would probably spike it open after kind of getting sold off, and then we would probably roll off from there. So we got that. We got that move we were looking for. But the overall execution just wasn't in my favor in terms of being able to manage the risk here. So that's really what it comes down to. Even though I was sizing in small at that point, you know, up at the 580 area, the risk was just too much to hold on to, and that's kind of why I ended up getting out of the trade, because I had to just kind of cut it off. But you can see now it's down there to the 525 area. So, you know, what's the lesson learned here? And again, the lesson always is, there's always a lesson to be learned. And this lesson definitely is that, like I said earlier, even when you're wrong, you're right. A lot of times in the market, you know, have these setups where you're right about it. You know, you have the right idea. You end up shorting, and you end up getting squeezed out, and the stock goes to where you thought it would go anyway. So that's always painful. You know, it's painful as a trader to sit here in hindsight, or sit here, you know, after the trade's kind of over and see the trade, to see the stock do exactly what you thought it would do in the first place. So in hindsight, sitting here now, you know, really I should have just been a little bit more patient with sizing in here as we kind of were showing strength, kind of holding above the 5-minute, the EMAs, the VWAP there, breaking above that resistance like that, breaking through this resistance kind of, and then turning that resistance into support. That should have been a better indicator to me that, there's a chance that we could maybe go a little bit higher up to that kind of 580 area that we kind of originally established as our stop. And that would have, understanding that and seeing that and being able to focus more on that in the moment would have been a little bit better for me to kind of manage my risk and my overall risk to reward on this trade. I think the risk to reward was still there, but it just got to the point where I was like, I just can't hold it anymore because this is the point where I'm kind of on my max loss. So, like I said, there's going to be days like this where you're going to be right, but you end up being wrong. Or you're wrong, but you're right, or you have the right plan, you got the right idea, but the overall execution, the sizing, and the overall just entry into the trade just doesn't work out in your favor, and then the stock ends up doing exactly what you kind of had planned for it to do. And that emotion is going to be there. It's going to kind of affect you sometimes. You're going to see that, and you might be depressed, you might get angry, you might want a revenge trade, you might sit here and go, well, I'm going to short GameStop I'm going to short, and you end up losing more money. But you've got to be able to cut it off at a certain point and walk away. And that's what I did. I kind of was like, on that stop out, I just got up and I walked away. I went outside and I was like, man, I had the conviction. I believed it, I believed it. I had that idea there on GameStop, but you can see, just didn't have the execution, didn't have the sizing right for this trade, although it did exactly what we planned for it to do. I had that plan before the market opened, before it popped. I had the idea that the stock would probably bounce at open, and then it would give us a good short opportunity. And you can see, what did it do? It gave us a beautiful short opportunity because now it's down there to 519. So from 580 down to 519, this wasn't going to be one of those stocks that was going to blow up your account, You weren't going to get move to $20 or $10 or anything crazy like that. It was going to be a pretty kind of slow mover in general. You're going to get some pops, and then looking for that roll off. And there it is. GameStop down there to 520 now. There's a good chance that later on today it'll probably be below $5. So there it is. Even sometimes when you're right, you're wrong, but it's just the way it works. I always say the market can stay. What do you call it? Irrational longer than you can stay solvent in terms of being able to hold through a bad trade that's just kind of doing stuff that it shouldn't be doing. So there it is, showing you guys a good lesson today here on GameStop.